Sushil Choksey from Rosy Blue Securities is our next guest. Sushil, thank you so much for taking out time in a very short notice. Firstly, if you could just tell about Vedanta, Hindalco or Kane, what essentially would be your view?
Good afternoon, Pankaj. Thanks for having me on the show. If you look at global scenario, I think most of the commodity companies have rallied in last 1 week post-Brexit correction, led by hopes. One is no rate cut. What's happening with the Japanese election, they're expecting more stimulus to come out. US is indicative the Fed rate hike is not happening. So all kind of supportive, and market has rallied to new highs on a global basis. And if you take domestic cues at the same time, GST talk has started being on a positive note between last 2 days. Even a new RBI governor appointment, which we are talking about, Panegre, is a pro-growth person. And right now I can see some flashes about merger on Kane Vedanta. So, and Alcoa reported result yesterday. So Hindalco is a clear indicative on a buy on that basis. But the merger talk between Kane and Vedanta, I don't have any view, but I am quite sure that any consolidation which throws the opportunity for some short-term traders, there may be a smart profit to be taken at peak.
Right, it's not it will not be a big deal as well. I mean, markets already knew that one day or the other it's going to happen.
Yeah, I was quite convinced that it's a stopgap arrangement in between. Shareholders might be arguing for a better swap ratio based on cash available at Kane, and Vedanta needed that cash. So somewhere the fine line had to be drawn, but it was very conclusive that this had to happen. It's a matter of time.
Right.
So possibly the need of the hour from LIC point of view as well as others is clearly indicative the merger is likely to go through based on what the markets are, and markets always signal something what is positive or negative first.
Right, if you look at Vedanta in terms of the overall picture, it is positive for Vedanta as they get access to the cash, and overall debt equity ratio would come down. Kane, even at $60 a barrel, is still profitable as far as the overall business is concerned.
I think Kane potential for further discoveries where they are located, discovery price compared to many other players would be very well rewarded because their cost per barrel is pretty low. And if discovery takes further shape, and if oil is stable in the current vicinity of 46 to 55 range, which we saw in the near term, I think current situation may be more a consolidation for the stock, but any upside based on where rupee is compared to dollar, at the same time where crude is headed, I think any incremental price would be beneficial to the stock.
Right, and would you be a buyer into these names, or these are generally the names which people don't want to own in their portfolio? Not about Kane, but maybe Vedanta and Hindalco.
I think between Vedanta and Hindalco, I would prefer Hindalco because the complexity involved in Vedanta is a stock with too many businesses, too many geographies and things like that. Plus they have yet to sort out the things in Odisha where the aluminium complex is concerned. And plus I don't know what they do with the balance acquisition between Hindustan Zinc and Balco, what kind of price they prefer if government has a roadmap to divest on a strategic sale the balance portfolio.
Right, so, even Tata Steel is up 5%. Any view on Tata Steel?
I don't have a specific view, but if Tata are able to manage any merger in Europe and able to reduce debt, we stand alone, we know Tata Steel does wonderfully well where margins are concerned based on captive raw materials. I think any domestic business purely on Tata Steel balance sheet would be a positive for the stock. I'm quite sure that domestic business would lie.
You think this rally that we are seeing today, so it's a mix of all the news flow that you just mentioned. Alcoa results were good. We are getting talks of Vedanta and Kane which may come in, which means industry is consolidating. Tata Steel is doing well. So it's just an all-out metal rally. And again, you would wait for company-specific results and commentary to come in before we can take any concrete call.
I would not only look at commodity rally which is globally happening. Other way to look at is if you've got a good rally in the market in last few days, the laggards are rallying today. So it is be it metals or be it some banks. Before, if there are any surprises from the earnings side, other surprises may not come up till the parliament starts functioning. But I think the laggards are definitely the underperformer. All the stocks are rising today. So maybe there is a large short covering happening, or there is some ownership which is driving these stocks which have underperformed for buy zone also. One needs to watch that very clearly.
Right. As far as some of the other names are concerned which are going up, so we've spoken about metals, but the other pack is the banking pack. Any view on banks like ICICI Bank? So we've seen Yes Bank rallying, we've seen IndusInd rallying. NBFCs, of course, have clearly continued with the dream run that they have. You think ICICI Axis, which are among the top gainers today, are playing a catch-up role?
See, if you view events which have happened over a period of last 1 week, the bonds, I think if I'm not mistaken, 10-year bond is at 7.32 right now. And I have a clear thought process that I won't be surprised by March we are at 7% or maybe even below. I think majority of the people don't agree. But one needs to watch out who's getting appointed at RBI, at the same time how monsoon is and where global yields are over a period of time. Looking at global yields with $13 trillion in negative yield, India is a very attractive destination with rupee stability, with all Rajan as well as other news already out. Rupee has not lost its value. So based on rupee and the bond market, the proxy to bond market wise, banks are doing well. Second thing, ICICI Axis may be a key beneficiary going forward, being a large corporate bank and consumer in presence. These banks have started acting very well with companies which need to be shredded. So whether be it SR or Jaiprakash or many other companies where they need to divest portfolios, sell out their books, loans which they have on books to other ARCs or wherever they are downselling, they are very conscious of the stocks right now. So I am very sure that if the intent is to cleanse the book by not holding those portfolio or divesting at a loss, one-time accounting would take a damage, but ultimately their direction is positive towards shareholder. Hopefully they don't build this kind of portfolio in future. So between the two, I think both of them are key beneficiary, and Axis may be a beneficiary today because of many other such events.
Right, Morgan Stanley has come out with a report today on Axis Bank where they are saying that, maybe for the next 2-3 quarters, these asset quality, NPA cycle for Axis Bank may still be, investor focus. But after that, the focus will largely shift on, what's going on with the retail side, where they are doing very well. Do you think that that could be a re-rating trigger after 2-3 quarters?
I think a healthier corporate book may trigger the stock more because consumer banking is getting too competitive, and keep in mind that public sector banks also, to garner a little share, are getting aggressive. So their aggression and consumer banks, between new banks, old banks plus payment bank, all the banks which are coming, ultimately the pie is going to be divided between all. So one or two people may stand out, everybody can't stand out. And the other way around, the consumer bank also trying to target small corporate loan, MSME and others. So some of the good private sector banks are also capturing into the corporate side on the smaller customer where nationalized banks are not able to lend. So the banks are putting the act together. One needs to watch out who's the beneficiary, but ultimately I think bond market, along with this divestment of some portfolio and this new mechanism which RBI enables this company to restructure along with banks, would lead to a betterment where the bank stocks are concerned on a short-term basis. Long-term obviously is looking good.
Right, but at this valuation, would you want to take a long-term bet on these banks or just wait for a bad day, a little bit of risk off to happen? Always markets gives a chance, right?
Market will definitely give a chance. I don't see that 40-50% gain which we have seen in some of the small public sector banks and 20% rally in private sector banks. There may be a correction, but one needs to keep an eye on the global market, which is, I think, fuel to the fire right now.
Right, and it's all a liquidity-driven rally. Once the liquidity goes, you may not have such a rally coming in. Every dip is being bought into.
I think right now people have realized that if you look at only domestic queues and domestic flows, the rally is sustainable. So anything incremental which is coming is supportive on a larger rally on a faster pace.
Right. Sushil, just stay on with us. Markets are just about to close, about 100 seconds remaining as far as market closing is concerned. And suddenly, just the metals pack has clearly become the favorite as far as markets today are concerned. So if you look at the metals pack, I'll just pull up the large cap ones, whether it's Vedanta, whether it's Hindalco, whether it's Tata Steel. Tata Steel has got no news flow coming in, but it's still up about 5% Let's just pull up Tata Steel, 342, 343 as far as Tata Steel is concerned. Hindalco on your screen is up about 4.5%. SBI is up about 1% or so. ICICI Bank 5% higher. We just spoke about it. Tata Steel up about 4.8%. It was among the top gainers. Tata Motors flat with a positive bias, and Axis Bank up about 3%. Axis Bank coming up in the last 1 hour of trading session. BHEL on your screen did particularly well. BHEL was on the lower side, ITC on the lower side, and Coal India down about 1.2%. BPCL 1.5, 1.6% in terms of decline, and Infosys was also on the lower side. Reliance 1.3% on the higher side, 1,000 rupees today. GAIL flat, really no change. IndusInd Bank, it's a reaction to the results that came in yesterday. So up absolutely flat. It opened up about 2% but then closed on the flattish side. HDFC Limited 1.3% on the higher side. Z Entertainment really no change, and HCL Tech was up about 0.7, 0.8%. Bharti Infratel, Ambuja Cement, Kotak Mahindra Bank up about 0.25%, and Asian Paints down about 0.5%. I think that's the closing bell. 49 points higher for the Nifty, 8,517, and Sensex up about 170 to about 185 odd points. Let's just look at what were the top gainers on the Nifty pack. So if I look at the top gainers, Tata Steel is up 5%. ICICI Bank was the next top gainer, up 4.7. Hindalco did well, up 4.6%, 135. And Axis Bank was up 2.8%. Maruti, Grasim, HDFC Limited, ONGC were some of the other gainers that did well. But in the end, you'll have to give it to the metals pack, which has actually seen a very, very big rally coming in. So if I now come down and look at the metals pack, I can see a Vedanta which was up 8% towards the close. A JSPL went up about 8%. No news flow over there. NBCC was up 12%. We spoke about Tata Steel, which was up close to about 5%. Nalco was up 12% in the end, and overall, even the mid-cap markets did well. Sushil, for some of these names like Vedanta, Kane, Tata Steel, maybe a JSPL as well, it could just be a lot of shorting activity as well, which is just getting covered because they are favorites of shorts. I mean, their momentum plays.
Say, I clearly accept what you have said. I think based on market cues today, where we are decisively above 8,500, and if the direction on a global basis is getting positive, people would not like to remain short, and heavily shorted counter definitely reacts positive, and that is visible between Tata Steel and ICICI today. Vedanta and Kane may be led by some news flow on the merger, but the other two stocks I'm definitely convinced that it was a short covering rather than a long which was visible.
And something like even an Axis Bank, ICICI, maybe some of the PSU banks which have done very well. They are shorting favorites. So, you tend to get these rallies which are sharp enough on the upside as well.
They have been in the past, but of late, what I hear in last 15 to 25 working days, that a lot of people were anticipating that which public sector bank looks good. So, barring SBI, Bob, the ownership pattern was little poor with majority of the banks. PNB got driven by short covering as well as PNB Housing IPO which has been announced. But I think it's more a direction that people are willing to take a bite, that post-monsoon GST, maybe global factors all put together, the mess may be out. And yesterday the news flow about 20,000 crores of recapitalization where public sector banks are concerned. So the government intent to support public sector is also directionally positive. So the fear of Jayant Sinha moving out of as a Minister of State for PSU, and now you are getting two positive news. So first is about recapitalizing banks, and second thing possibly a pro-growth RBI governor. So one needs to watch out who's likely to emerge, but based on news flow, maybe some of these banks are likely to show a positive sign.
Right. As far as PSU banks are concerned, would you be a buyer into them?
I would be very selective, seeing the bank which is specifically working on the bank front rather than only looking at NPAs. Many banks are shut shop for most of the existing customers also. So I would be prudent. There are some small south as well as north based banks which are very active despite their challenges, and they're doing some good work. So I think it's more a human, single individual and a human resource in a particular bank which drives the bank today. So I would be selective on those bases without giving any names. Be very choosy and selective which banks are you participating.
Right,
if the banks are approximately around 25 to 35% of book, and that is 25 to 35 bips of book value, they may be good. But looking at the market condition, SBI Bob may show a good sign going to next quarter too. I would be selective along with some of these other small banks, specifically banks like Vijaya or Oriental Bank in North. These are small banks which syndicate. Some of these selective banks which I have recommended to my investors or may have invested for all of them.
Right. I just wanted to understand that, there could be two ways to play the PSU banking. So one, you play via SBI and Bob, which can do well. There can be a recovery in pricing as well. Or you play via the Dena banks, the Allahabad banks, or, very small regional banks which may go ahead and merge into the other bank. Is that something that you would look at as a strategy?
See, the merger is a faraway story according to me, because these banks need a lot of capital before merger can be effectively taken. This is not SBI that is taking over as associate banks. So any of these small banks, barring one or two banks which can be acquired happily by some other bank based in west or north for merger, these small banks means some of the banks which are in trouble today, they need huge amount of capital to recover, and majority of them have gone headless also, so they don't have a chairman active. So the merger is difficulty. So I would be selective, and I don't see any merger happening unless it's a compulsion on anybody's head till at least this year is over, the financial year of most of the banks are over.
Right. How would you look at DLF 160, 161? Again, you think it's just because of shorting activity that we are seeing very sharp surge into this name, or you believe that, there could be, some recovery in such companies?
One is very certain that it's one of the best promoters in quality of assets they've built or they own in the business. And the intent of the promoter is very clear, to stay focused on what they've done. And with the challenges which have emerged in last 2-3 years, they are trying to overcome with the situation, whether led by REIT or whatever the structure is. So a correction would be a healthy zone to buy the stock. But I personally feel on a long-term basis, DLF would outsmart most of the other real estate players in terms of performance for shareholders.
Right. As far as DLF is concerned, or the entire real estate pack is concerned, they were very bullish in 2007, very aggressive in debt, very aggressive in acquisition of land, building, construction. You think that has changed? They are moving towards asset-light model. They are first trying on execution and then trying a new project. There has been a healthy change in the last 8-9 years.
I think direction is very clear that they have enough space to grow on. They have enough land bank. So first, let's monetize the space which they need to deliver over a period of next 3-4 years. And maybe a year or two later, when they find that their capability is to execute and the marketplace is sufficient to absorb that kind of supply, they may look at some land bank. I have no knowledge what they are up to right now, but my personal thinking based on what I am observing over a period of last 1 or 2 years is definitely the direction is to intend show betterment where the shareholder value, because they are the largest promoter ownership in the real estate space is concerned. With 75% ownership, they would perform for themselves as much as minorities.
Right. How important do you think is the success of the primary markets? We saw Questcorp listing today. Some of the earlier listings were quite good. You think that is making the markets healthier, that is getting more participation into the market?
I personally feel the good success of majority of these IPOs as beneficial to the market on an overall basis, and it's better for even our industry as well as capital markets, because shortage of equity led to a lot of mess where entire Indian corporates are concerned. Once equity is available, a lot of messes can be over, because most of the projects are stalled because they need certain amount of equity, at the same time some approvals from government. So if one side is getting resolved between debt and equity, the other side will automatically support.
Right. Sushil, thank you so much for joining us here this afternoon. Hope to see you again.